Good morning, friends. This is the market update for I think 10th of February 2020. Now, what's happened for the last 5 days is that possibly people have been misled into thinking that there has been some sort of trend reversal. Why? Because we fell very sharply and then we went up very sharply. Now, my issue with this is that no one, no large institution can buy a whole lot in this sort of a volatile markets, and that has been proven by the FII figures, by the DII figures. So I am very skeptical that this can continue. Plus, I also think now there are two options for the market. Last couple of days have been narrow range days. A, we can go back towards the lows. B, we can consolidate at higher levels and then maybe after a period of time move up. Now, going by overnight US markets, they came off 277 points again, apparently on coronavirus fears. So, that basically means that the 3 or 4 days of large rallies was some sort of a short squeeze. But since we are, momentum and technical traders, we are going to gap down on Monday. And my sense is that you will get follow through post the gap down. And sometimes, these things tend to have a momentum of their own. And if global markets continue to participate on the downside, then, giving back the rally maybe is also possible. I mean, these are volatile markets, so don't assume that this can't happen and that can't happen. Yesterday, we advised our clients to take substantial risk off the table, create more cash, and be ready for a decent decline, because people tend to load up on several stock futures, etc., and once a painful correction starts, they get into trouble, because the problem with these fast moving markets is that they will come down also fast. So let's not assume that the market will consolidate and give you opportunities to exit. So as far as Nifty and Bank Nifty are concerned, I think 12,100 is our old trusted level. So go short with a 12,100 type of stop. On the Bank Nifty, I think 31 300 350 is a decent stop, and chances are that you will get downside tomorrow or on Monday. Mid caps, people are assuming they will keep going up and they will outperform, etc., etc. But if the Nifty falls 100, 150 points, the gas in the mid caps will also be over. So let's be clear that the market is still vulnerable to downside. A, because the global news flow has not settled, and global markets are also fairly jittery and in what you would call choppy trends. So downside first target on Nifty could be closer to 11 930 950, and then we have to consider what sort of momentum picks up. If you look at charts of HDFC Bank, Reliance, ICICI Bank, everything seemed to have shot up, and often these sort of spikes are short squeezes, and the moment the shorts are out, they tend to collapse back. One of the things I want to combine here along with this video is a strategy that we've used this week, which is that you look at stocks which have been hammered for no reason, which means like insurance stocks were beaten up black and blue because of the budget. And I have been saying for the whole week that insurance will not go out of fashion, and hence ICICI Pru went up 15% because people soon realized that this sort of sentiment is unwarranted. So, in futures trading, if you buy stocks which are hammered not because of business reason but for other reasons. The other example we got this week was Avanti Feeds. Bad results, but immediately from 580, yesterday it went to 650. So those who want to indulge in individual futures, one of the best techniques is that you wait for something extraordinary to hit some stock. Like some time back, we had Infosys, which was hit by that harassment scandal, and it fell, I think, 10 to 15%. And from there, it bounced back and hit new highs. So, those are the best sort of setups which can give you 10 to 15% in a very short span of time. These things, they don't happen every day, but when they do happen, people who have that sort of view get good upside. BPCL, when its divestment got delayed, it came down and down and down and almost got to its 200-day moving average. From there, it moved up almost 10 to 15% as divestment came back on the table. So, this is the way you can combine news flow with price action, and that tends to work the best because the weakest sentiment happens when news is particularly bad. So keep this in mind in terms of sectors or stocks, that whenever something comes down for a non business or a non structural reason, which is a one off, you always get great opportunities to buy where downside immediately reduces. Another example is Bharti. The day I think uh, there was some sort of bad news, some big loss, etc., Bharti actually closed higher. So, whenever you see bad news, your first response has to be, let me see how the stock is reacting. And if you are able to diagnose, see what happens is, even if you are wrong, the stock opens so much lower that it can't hurt you. And if you are right, you make 15 to 20%. These are the kind of trades that you will get 3 to 4 times a month, but the returns will be very, very superior instead of trying to do these silly intraday style trades. And uh, waiting for opportunity is the best course of action. For Monday, I believe that large heavyweights will come off. You could have the odd, Tata, Global, Jubilant, etc., things which are in very, very strong trends, trying to move on the other side. But basically, I would think 70 to 80% of the market will be lower, because this was a rally which happened for no great reason, and it will come off also because of no great reason, because coronavirus is back to haunt us. That should be all. Take care, trade well, and please consult your financial advisor.